Hi everyone, my name is Paul and I'm just going to do a quick video. And what really I'm going to try to do over the next few weeks is every week the banks release what we call as a global view of factors impacting the economy, whether it's North America, worldwide, or even into an individual country like Canada. So basically, one of the key stats that they looked at this week was full-time jobs. And I want to highlight this very quickly to you. And a couple of reasons why I want to do is the emphasis we have had created some significant jobs since 2014. So despite a drop in commodity prices, we've seen a huge increase, not a huge increase, but a significant increase in employment. And that's really key in terms of driving an economy forward, because if there's more healthy employment gains, it means less impact on EI, which is basically a taxation issue in terms of the government's funding. However, the thing that you need to bear in mind is we are still growing public sector jobs at a faster pace than private sector. And in general, that's not sustainable. And you'll see with this quote here from the CFIB is that if we were to bring compensation down at government level and back in terms of reality, we would save about $20 billion per year at all levels of government. That's significant. Think of that $20 billion, how that could be used in infrastructure, how that could be used better yet in terms of moving things forward. But that's not what you're hearing from the socialist type of people. They believe that we should be updating the private sector wages, and that's not necessarily the case. GDP results came out for the US, and basically there's two takes that you want to take quickly on this. Consumer spending's up, which drives 2/3 of the GDP in the US. It's up by 3%. But the biggest alarming trend is inventories have grown by 60%, and that's kind of going to put a drag on manufacturing because they built up inventories. They don't need to buy more goods and services from manufacturers. Canada in general, GDP grew, but some key sectors that grew most were like retail, some of the service sector, transportation. We did see some comeback on the commodity side, on the oil side, but not significantly enough this year, so you need to bear that in mind. What are going to be key areas driving forward for the next few months? Well, we expect automotive sales will be still pretty strong, especially in the US. Housing starts are still very strong. We're seeing an upward trend to that. U.S. consumer spending, which drives 2/3 of the economy, seems to be very vibrant. Now, key issues facing it seems to be the U.S. is, along with maybe the UK, are growing at a faster pace than other economies. And then that's kind of concerning us because global growth is very slow. The other thing is we don't know the impact of the trade sanctions being lifted in Iran, how that will impact oil production, or how that might impact foreign direct investment as well. I just highlight this, the commodity index, to show you that the commodities are so far off in terms of things. Most of you realize that we've seen to hit a very low level of commodities, but there's no indication where that's actually going to, if we've hit bottom or not. I just want to show you quickly the market outlook. So you're seeing from 1 year that you're seeing most of these stock exchanges have been hit hard, and a lot of that's to do with how they're dispersed in terms of the companies and what the makeups of those markets. So you're seeing most cases we're down significantly in terms of basically driven by the commodity area, whether that's oil, gas, or in the mining stocks. They basically have done a number. Now, some of the key areas you're going to see here, consumer spending is pretty solid. That's what it's talking about here. The tech side is going through a different type of transition. We've already seen announcements from Apple, where Apple's basically having a hard time with their iPhones now, but there's also more movement going in other aspects, where there's more movement going into cloud and mobile areas, because that seems to be the big demand. And the other thing is Internet of Things seems to be a growing area. The concern that we need to do is you need to watch that area, because it's almost kind of giving you a little bit of concern when we went to that .com bubble in the 90s. So we want to be very concerned when we look at the Internet of Everything in terms of who's bringing something to market. Is it viable technology that consumers will adopt? That's something to be critical of to watch. This kind of gives you just a trend. Again, the North American sector's performances, where you're seeing things. You're seeing something like year to date or the year, you're seeing certain sectors. There's only about 3 sectors that have actually done well over the past year. This shows you what the TSX shows you, the same thing in terms of where you're seeing the growth, and most of it you're seeing in the information technology area. Now we are going through a period of time, probably for the next 18 months, that we're going to see a lot of volatility in the markets just because of what's going on in Asia, what's going on in the US, and even Canada in terms of what's going to happen with government policy. So it's critical as you review things to kind of understand when you make decisions on investments or looking at it in terms of the overall flow of your lifestyle, in terms of your payment of your debt down and positioning yourself, you may want to be looking at your whole spending and your whole taxation issues in terms of how better manage your money. Because we're going through periods of time where you're going to have to make decisions based on what you're going to see in terms of your long-term vision, but also your short-term vision as well. Thank you.